in the restaurant business for quite some time, almost 20 years. While I was working in the restaurant business, I also obtained my degree in finance from University of South Florida, downtown St. Pete. While I was doing that, I was just trying to figure out, should I go in the corporate ladder, in the corporate world and start, work in the finance world or not? Of course, in the restaurant industry, the money's good, the lifestyle. About 6 years ago, I got married to my wife, and about 4 years ago, we had our first daughter. So that's where I had to make a decision, because of course the scheduling and everything that involves the restaurant business, it's completely different, versus, what a family man would do. So I made a decision to jump into the mortgage world. My partner now actually used to work at the restaurant where I worked at, and he had been doing it for 2 or 3 years before me. He invited me, he's like, just check it out, try it, see how you like it. So started with him part-time, liked it, and then make the decision to move on to full-time. So obviously he had a great pipeline or a lot of business going, so I was assisting him at the beginning, trying to learn the business, trying to see how much I can do, loved it, and then decided, of course, to kind of split on my own. The company that we worked for is a huge company based out of Minnesota, second biggest brokerage company in the United States. Great company to work for. But we were doing so much business that we decided, you know what, why don't we just do this on our own? So in 2023, about a year ago, actually, April of 2023, we decided to split off. And of course, it's a long process, as far as to split off, especially in the financial world. A lot of red tape, a lot of processes to go through. I stayed on with the old company to finish our pipeline. He moved on to the new company, hang the license, and we got on our feet, slowly. Now, without even trying really hard, we've got about 12 loan officers, including the 2 of us. It's 14 loan officers and about 5 processors. So it's going well. Business is going good, and of course, 2023 was the worst year for mortgages or real estate transactions, just in general, of course, and that's due to the high prices and interest rates. How am I doing there? 5 minutes, okay. Let me see, I've got some notes here. So as far as our company, our office, our brick and mortar office is based in downtown St. Petersburg, but everybody, just due to the line of business that we're in, everybody pretty much works remotely. We've got surprisingly, most of our LOs, loan officers, are in Lakeland, and then just a couple in St. Pete, and a couple in Tampa. I've been trying to, I put on our large chat, trying to bring, on the new chapter, trying to bring one of our loan officers, but it's becoming tough, and as much as I try to explain to them, this is great, and it's the distance thing, right? I also live in St. Petersburg, by the way, which is a good 40 to 45 minute drive, joining, Sullivan and Byers, I think, and now Gavel too, right? Ravi's that group. So it's okay. The drive is fine. In the morning and then coming back. But as far as the company goes, what we do, the products we offer, right? So we are wholesale brokers that work with different lenders. We have partnered with about 22 now, I think, 22 lenders that are all over the country. So wholesale meaning that we pretty much offer all the products that are out there. In the sense that, of course, everybody offers the conventional FHA and VA loans. And then we jump onto the other products, right? The non-QM, they're called, non-qualified mortgages, right? So what's called the DSCR is a very popular one, has become very popular in the last 2 years, I want to say. So it's called the debt service cover ratio, in a sense that a lot of investors or self-employed people, they are not showing, let's just say that they're not showing as much income on paper. So it's based qualified, the mortgage qualifies on the property itself, right? So you would put 20 to 25% down, for example, and 25 typically, and then the projected rental income of that property is what qualifies for the mortgage, right? So we're not using any of your income, we're really just using your credit score, right? Of course, a good credit score would be very helpful. And then we have other products like what's called a bank statement loan. So let's just say Tim owns his business, you know, we grab his last 12 months of the bank statements, they do a calculation on what they deposited at that time, and then just use the ratio, you know, do a haircut like 30 to 50% ratio of what was deposited, so no tax return needed or anything like that. So as far, if there is a way to do the mortgage, you know, or get into a house, we know how to do it. And then personally, you know, I oversee, so now we've got, of course, 12 other loan officers. I oversee about 25 to 30 files, mortgages per month. So I can speak in much confidence when it comes to a mortgage, right? So what makes us different versus you walk into a bank, you walk to, let's just say Bank of America, hey, I'd like to get a mortgage. Of course, it's just some person there, right? And that's just gonna pass it on to the next person, and so on and so on. By the time, so the timing, right? The timing, the speed is on what we offer as far as getting things done, right? So you come directly to me, and that's pretty much, that's it. It's done, because I'm just gonna take your entire file, do a pre-underwriting review to make sure that you are good. Because that's the biggest thing, you know, that people, you know, that it fails when it comes to, you know, as they go on their way. Because someone will just fill in what they put on their application, and they're just like, great, you're qualified, without doing any paperwork, without doing any other work. And then they're just driving around looking at houses, and then the process starts, and then it just falls through, and then just ruins everybody's. What else? Let's see, I've got a couple of notes here. What's a good referral, right? What's a good referral for me? Of course, real estate agents. Real estate agents is the ones, you know, of course, I'm gonna buy a house, I know an agent, and then, of course, you go to a bank, right? So what the real estate agents will say is, hey, make sure you at least compare with a local broker. You know, at least compare your options so you know you can make the best decision. Because it's a big transaction. For most people, it's the biggest transaction of their life. So, of course, the best thing that they can do is compare options. And of course, anybody, of course, the real estate agents usually are our biggest partners. And then of course, anyone, right? Anyone that's looking to buy a house, like Carl says. Anybody that has a house. So anyone that's looking to purchase a home or obtain some sort of financing for a residential mortgage. Is there any questions?
Albi, I got a question.
Yeah.
You turned the job around in like 8 days recently, right?
Yes.
How do you do that? I'm so intrigued. I want to know how you did that.
So the client had previously reached out to me, and I told her this is the type of product you can get. This is the type of loan you can get. Like I said, I did the pre-underwriting, looked at everything. He can't get it the other way. And of course, the rate was a little bit higher, right? Oh, he's like, no way, I'm not doing it. It's okay, go ahead. And then, of course, he walks into TD Bank. They're like, great, we can get your mortgage, right? And then 3 weeks go by, they're like, actually, we can't get your mortgage. You know, so, and of course, I had everything ready, right? As far as it's just being prepared, right? 85% of the work is done up front. So I had everything ready. I knew exactly what to do. Just submitted it, you know, it's speed, right? And then just got it done.
That's awesome.
Nice job, Albi.
Yeah.